Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Wednesday, the 29th of July, 2020, 6:10 p.m. Central Time. So the stock market, well, interesting day. There were a lot of highlights. For those of you that get my written updates, they're going to be all there. I cover what the highlights were of the text, obviously the release of the statement from the FOMC meeting, the Federal Open Market Committee meeting, and then what Fed Chair Powell was asked, what he said, the highlights of that as well. Simply put, COVID-19 is scaring the heck out of the Fed. Simply put, I think the Fed might be starting to look at further back markets like in the bonds and so on and saying maybe they can get a lot more bang for their buck there too by putting pressure on those. They said they're going to keep up with the current purchase amount, but the allocations might change a little bit, and the Fed is committed to that 0 to 0.25% interest rate area, and they don't see anything coming. In fact, he was very clear. They're not even thinking about raising interest rates. As for yield curve controls, I didn't get the answers I wanted, but I suspect that what the Fed said is what I'm talking about. The September meeting is my guess where we're going to hear a lot of this data. I don't care how close it is to the election. The Fed is actually independent, and I think they'll act that way in September. Be careful. If COVID picks up, you could get another round of QE out of all this. So you've got to start thinking that through. Stock market, it's going like this. Okay, now I got to get beyond that. That's taken place. What's that GDP in the morning going to look like? And we're looking for the worst quarter of GDP ever, negative 34%. Big number that they're looking for. Gold getting a bid off of that as traders around the world go into a safe haven asset. Why not? They're not competing with 0% interest rates. I mean, if you look at short-term money, it's unbelievable. Bonds, one thing. Then you get to the energies. They're pretty flat right here. But as you can see, you closed at 43.75 in the Brent. You're 41.31 in the crude. So the differential's about $2.40. Been there for a while, in fact. When we go to the S&P 500, strong. The market is still up 47 points for the week, up 1.5%. Not a dramatic move, up 1.5%, but still strong. You can see that you've got a consolidation pattern. Throw the name of the chart off. That's a consolidation pattern. It's basically sideways. You can see the action turn today bullish in that. You've got higher lows, higher highs. You're over the 18-day average, so the bias is up. The Bollinger Band is right above you at 32.86 1/4. That is the upper target of the market. We're starting to develop even more sideways action than normal. You can see how the market had been having a slight bend to the upside. Suddenly those Bollinger Bands are getting a bit more sideways. It's not yet a pipe. I don't call that yet a pipe, but it's getting there. You're getting more into the pipe situation as we'll take a look at some of the other markets. What are the slow stochastics in the S&P doing? They're screaming the market is overbought. So you have a market that's developing sideways action. Other parts are bullish, but you are in overbought territory. In the NASDAQ, you're starting to develop that sideways action again. Do you see what's going on here? Back and forth action. So you've got to pay attention to that. Unlike the S&P, the pattern here has been lower highs. If you look at the low at the high of today, it was, and that's Wednesday, the high was 106.99, and tonight you've taken that out. So you now have a pattern of higher lows, lower highs. So you're narrowing in like that into this sideways pattern. I think you're going to develop that sideways pattern. In other words, you're going to develop a pipe in here where the market starts spinning around. Next week, remember, we're going to get Vice President Biden giving us his person that he wants to run with. We'll see if that does something to the market. GDP next number tomorrow. But after that, I think it's just summertime trading for us, which gets interesting in itself. Here is a pipe that you're forming in the Dow. So what is a pipe? Well, it's certainly different than when you're back here. You can see how market was moving. This gets to be that sideways action of pipe. And from pipes, you break out into new territory. So from a pipe, I look for a new trend. That can be a resumption of the current uptrend, which still is what I favor, or it can be a sign that the market is peaking out. Don't know what would cause that, but it could happen. But it's from the pipe, and that's because sideways action ends up being a base or a top. Got it? When you're in the Russell, I don't see this pipe action. It tried it right here, but it's widened a little bit too much for me to call it a pipe. I'm going to call this an uptrend. Overbought, trying to embed, upside target, upper Bollinger Band. When we look at the VIX, the market is still got an embedded reading. Now, did it ever lose it? Let's take a look right here. Here it's embedded. Right out here, the market loses the reading, gets it back the next day, and it has kept it. So this is not a market that kept that unembedded reading. Now, you're back also to about where the pros, I think, sold their original puts. It'll be interesting what the market does. It tried its run, and maybe that was all it was worthy of giving us towards the 18-day average of closes. I don't know. My guess is they're still with those short puts. In the bond market, I'd be scared from what I heard on the Fed chair that looking for, like some people are saying, I know Goldman had said it, they expect 1% 10-year note by year end, and they're looking, Nuveen, I think was the other one, looking for the same thing. I'm not seeing that in today's data. Not that they're wrong. These people change their ideas regularly as the fundamentals warrant. They're great firms for analysis, so I'm not knocking it. I'm just wondering, with all I'm hearing from the Fed and market action, I'm not seeing what they see. And I'm real bothered by it. And as we're closing more things down, not opening more things, that can't be something that drives interest rates higher in my head. At the end of the day, my head is bad. My chart action and reading of it is probably better than I understand that. I see an overbought market in an uptrend, resistance at the upper Bollinger Band. Each time it's hit it, it's giving you an opportunity on a pullback, staying in the trend to buy again. That's what I'm reading on the chart. 10-year note in a pipe. Now I'm beginning to wonder, somebody knows something about what the Fed might do next, because if I'm right, I don't know that I am, and this turns out to be a base and you start moving up, you're at about a 0.5 and a fraction on the 10-year note. Are we going to go under the 0.5 into the 0.4 area or lower? I don't know. But if this turns out to be a base, which I suspect it is, be careful. We're in the first stages of trying to embed. You're not there. You didn't do it yesterday. You didn't do it the day before. Today, Wednesday evening, Thursday night for the trading. That's where it's trying to do it. You got a long ways to go. You're not trending. You're bouncing in the pipe, and that's all that you can say. Remember that term gorilla glue that I use so often? Well, here it is. Look at how you've just stayed on the Bollinger Band. The hardest thing to do, and I have to hit myself in the back of the head, I should have stayed with silver. I know that because I had my traders long on it. And they got out with great action. I have managed to catch this big trade and my written recommendations. And I'm proud of myself for that. It is so hard to do that, and I recognized it. It's a new term, the gorilla glue trade. It's not in my charting course. I'm making notes when I redo the course, and I promise you, I redo everything I do. I bring it back and redo them every few years because there's so much more to add. That's going to be in this. But when you lay in and you just sit on it and you have an embedded reading, it's heaven. You're looking for that market to keep going until it ends. Nobody's going to ring a bell and tell me ahead of time it's ending, but it's still in the bear thralls. You have the opposite. You have the euro doing it right on up. This is the gorilla glue to the upside, embedded reading. But this all starts with locking in on the Bollinger Band, and ideally, then you get the embedded reading. It's rare that the embedded reading leads to the gorilla glue trade. It's the other way around. Got that? Very important distinction. In the end, well, you've had 4 days in a row over that top. I'm looking for it to move to the right-hand side. There's a reason, though, that something's going on. Do you remember that word pipe I used? This is a pipe. And as I told you, the question is, which way does it break out? you often, not every time, get an idea by two breakouts, especially when you get closes one above the other in the top quadrant of a range outside of it. It is a signal that you've had a legit breakout. And as you can see, that's what's happened in this market. Now, the market is also every day touching this number. And do we have an embedded reading? Let's see. On Wednesday, both numbers over 80, both on Tuesday, not on Monday. We don't know where today's going to end. So it might and it might not. All you are is overbought, looking to see do you get that embedded reading and how the market ends up with those numbers. So I'm watching. That's the best word I can say. I'm a watchman. Did you see that got an Emmy Award? Very interesting. Okay, higher lows, higher highs, embedded readings in Bitcoin. Well, let's see. Day two, nope. Just like the other market. You could embed your knot, and I don't think you're going to stay very long over that upper Bollinger Band. This type of pattern already broke out from the sideways action. You may have spent your action for a little bit, let it pull back. Brent versus WTI. Well, 178 to 80 looks cheap. 250 might be an expensive number. Market seems to like to hang right by that 18-day average. I'm using the SEP versus the SEP. Classic pipe. Look at how you keep narrowing in. What's going to happen in unison? You're going to break out one way or the other. That's what we're waiting to see. And you're not trending. You have higher high, lower low, stuck in here. Remember what I told you. Trading in a classic pipe, one that narrows this much, why? All it does is beat the heck out of you. You can see it happening in WTI as well. Same thing. I'll play it after it breaks out. Gasoline, same identical thing. I see the trend is down, the bias is down, momentum's down, but it's a pipe. I hate pipes. Then we get to the nat gas. The market's got a pattern of higher lows, higher highs. I'd be a bit cautious up here. You're getting overbought, narrowing in on the upper part of that. We're going to get the EIA numbers tomorrow for nat gas. I think they're looking for 25 billion cubic feet, which is a very low number. Remember all that hot weather we've had that we burned up those air conditioners using it, and that would be the reason why you're getting such a low number. We'll see if that holds up or not. So you put it all together, you try to come up with a game plan that makes some sense. Be careful on some of these metals, as I've told you. I want to remind you what I do. I help you with your own trade questions. That's my goal. Do I do it right? I hope so. Do I walk on water? No, I could drown. Is everything I say going to work? No, it's not. Am I going to be consistent? I am. And that's what you get with somebody that's an analyst, as long as I've done it, that realizes that the name of the game is trying to do the same consistent thing over and over. What do you think an algorithm does? What it's programmed to do. And until it stops working, they keep that program going. The moment it stops working, the analysts look, why? What's the change they got to make? The idea is do the same right things over and over. And if they're right, you're hoping to make money. Nobody can guarantee you make money, including the algo writers. But you can see what I cover, all of this. In the morning, what I do is I'm up at about 4 in the morning. I read everything. That's all I can tell you. Most people don't get anywhere near. I'm one of those old Evelyn Wood course people that took it, but I read much slower there because I want to retain what I'm reading. And I want to understand what I'm reading. By 5, I'm pretty well done. I'm by then rolled out of bed, downstairs having a cup of coffee, reading again, but I'll have read by that point what's going on in Asia, what's going on in Europe, and I'm back to America. At about 5:30, full of caffeine, I go downstairs and I start recording 40 charts. I'm not in that video. It's too early. You want to see me in my beauty. I come out of there as I'm sitting there and I'm giving you everything we've got. Typically at 6:30, it's published. It's rendered. I'm through recording. It's a 20-minute video typically. And I'm throwing trade ideas galore at you. And the idea, why? Let's assume you have your own idea. Buy or sell, doesn't matter. I may be the opposite. At least you're seeing the argument. I may be right on the side you are, giving you the opportunity. Hey, that's what I wanted to do anyways. Away I go. Am I going to be right all the time? No. Are you? No. Okay, nobody is. But I think I bring more to the table than most. So if you'd like to try this, it's $7.95. It's not a lot of money. There's no contract with me. Give it a try. You don't like it, you stop. You like it, it's $15 then every 30 days thereafter. You don't like that, you want it less, you can buy 1 year up front, $13 a month, you pay it all up front, okay? Pretty simple, $156. What do you get for that? Well, I'm starting my weekend webinars now. I already did as I promised. Every week now, for the longer term traders, I'm putting out the weekly chart edition on Saturday typically now. And in that, only weekly charts on 40 commodities giving you trade ideas for the longer term. Obviously, sometimes there's more risk because you got the weekly charts. Sometimes it's shocking to me. I didn't expect to find what I did. There's really small risks on a bunch of them. But it's dollar risks. That doesn't mean you don't get stopped out worse or other parts. It's the initial risk we're looking at, where the stop would be, so on and so forth. To find out more, go to our website under the word research. You can always call my staff. They'll work with you on it as well. Welcome to the family. And remember, I am starting the webinars. They're going to be on Sundays. And we're working out all the parts of it. It won't be this Sunday. I already know it's going to be next Sunday. So I already know my start date. Reason it's not this Sunday, we have a couple of new factors. We've dealt with the Zoom people. It's how we want to let our subscribers get in free, and other people are going to pay a fee to get in. So it'll be a pretty big event regularly, probably twice a month. So that should be the fun of it. I'm Ira. You have a good day.